We're in New York for the Argyle Investment Forum Gold Conference, sponsored by the World Gold Council. We're talking with Martin Murenbeeld, who is the chief economist of Dundee Wealth. Martin, you had some interesting comments during your address this morning about bullish and bearish factors in gold. What do you see as the most bullish factor for gold right now?
Probably the most bullish factor for gold is what I call monetary reflation. We're anticipating that the European debt crisis, while it is not going to get resolved, I mean, I think that the euro will break down, but certainly for the near term, we're expecting the ECB's balance sheet to be put into play in one form or another, which means in layman's terms that the ECB is going to have to continue to do more monetary printing. So I think that's very bullish. And we saw yesterday a U.S. consumer confidence number that was quite weak, and that probably accelerated people's views that QE3 will, be sooner rather than later, which is another positive factor for gold. The more central bankers put liquidity into the system, the better it is for gold.
So what about China's economic situation now? There's a talk that it's may have to avoid a hard landing. How's that going to affect gold?
Well, if it went into a hard landing, it would be very negative for gold, and it would be negative for gold for a period of time that would be defined almost entirely by how rapidly Chinese policymakers would respond to the hard landing. I fully expect them to respond, and the typical response would be to ease monetary policy dramatically and to ease fiscal policy dramatically. And those two things typically are very good for gold. But, until they respond, a hard landing would be negative. Now, let me also point out quickly that in terms of the people that I talk with who are close to China, it does not appear that a hard landing is on the immediate horizon. A soft landing is what China is trying to engineer, and the best guess is they will engineer that.
Talk this morning out of Europe about possible collateralization of gold to help handle some of the deficits in the sovereign nations. What about that?
Well, we've been kind of expecting it a little bit. You never quite know exactly how these things will all turn, but Europe collectively has about 10,000 tons of gold. The pigs alone have about just under 3,000 tons of gold. So it was always in the back of our thinking, and we itemized it in our bearish factors, that somehow or other this gold would be harnessed. Now, collateralizing it is very different from selling it. We did not think the gold would be sold, and it doesn't appear that it will be sold if it were to be if it were used in a collateralized fashion. Simply put, somebody lends Europe, 100 billion, and if Europe can't pay, or to make the lender feel secure about that lending, they have a claim on Europe's gold. So the lender would, in a worst-come situation, would simply take over title of the gold. And if that was China, well, there's no way we think China would sell the gold. China will just add it to its reserves.
In the U.S., what's the possibility of the Federal Reserve doing another QE program in the next few months?
Well, probably not in the next few months. I don't think anything will happen before year end, but sometime next year, the probability rises. There's going to be some fiscal drag in the U.S. economy. We're probably going to see some weaker U.S. growth numbers, not necessarily negative, but certainly closer to zero. And, that will encourage the Fed to at least think about it. Unemployment will stay quite high. And last but not least, Janet Yellen, who is on the FOMC, has kind of sent out this feeler that maybe the Fed should go back and start buying more mortgage-backed securities. So, it's in the pipe. It's just will it or won't it? But they're certainly ready to respond. Yeah.
Thank you very much, Martin.
You're more than welcome.